Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Tuesday, January 6, 2026. It is 12:33 p.m. Eastern Time as I'm starting the video, so we're about halfway through the trading day. And what I plan to do in this one is just cover some trade ideas, really, and more so speak to what I think 2026 is going to look like as far as trading goes. I've been trying to put together in my head. I have a lot of ideas and different things I want to share regarding the markets. As I mentioned to you recently, I want to do a video dedicated to economic indicators. So we'll look at that fundamental analysis or the macro picture of the U.S. economy. That'll warrant its own video. I'm in no rush because those are the one thing that has the least importance as far as timing goes. Fundamentals matter in the long term. Warren Buffett was famous for fundamental analysis. Read a balance sheet, buy a company. If he got in 5 years early, it didn't bother him. He would take a loss. He's looking out 10 plus years. That's fundamental analysis. So if you can read the tea leaves right, and that's your style, great. Day to day, there's not a trader in the world, not an active trader in the world that uses fundamental analysis for timing entries and exits. So again, now I do analysis on both the longer term outlook, where I think things might be going, and the impact. By applying fundamental analysis and technical analysis, it can help to locate pockets of opportunity. Let's say something's falling, but the fundamental picture is improving, and the technicals showing maybe we're starting to firm up evidence of a nice trend reversal, end of a bear market. That's where fundamental and technical analysis will marry together nicely, especially on what I call long-term trades that are long-term swing or trend trades with holding periods measured in months or years, not days or weeks like most of the swing trades here. If you're swing trading, fundamentals don't mean squat. They mean less than zero, because what that will do, if you try to trade off fundamentals, short-term trading, it's going to pollute your brain. It's going to give you that bias that why something shouldn't be going up anymore. Think of Bitcoin, silver, whatever at the wrong time. That you can't understand fundamentally. It shouldn't be going up or down, but it is. Again, that is where fundamentals over time will play out. Technicals are the only way to trade, swing trade, active trading, trades that you're holding, trying to catch a little zigs and zags. So, okay, so I'm going to get to the fundamental video later. I'll do a more extensive video on the broad markets. I've been doing a lot of those lately, but what we're going to do here is talk about, how to profit in 2026. I wholeheartedly believe it will continue to be a stock picker's market. Now, we're going to go over, it has been a stock picker's market. I've been saying this. If I've said it once lately, I've said it 100 times in the past few months. It has been a stock picker's market. The stock market, although it won't go down, it's not going up either. It's going up. Yes, we're flirting with all-time highs. I get that. But let's, the purple box that I've been highlighting for many months now, that's it. So we're here. We're in this range. And it's a relatively, relative to the scope of the previous move, relative to the bull market, it's a relatively small range. It's a 5% up and down range in the S&P 500, right? That purple box. And so we get to the top of the range, we come to the bottom, we go back to the top. There's a midpoint line right here at about 673. We're at the top now. As I said back here, that any new high would be a marginal new high, most likely fail. And that's still I have pretty strong convictions on that. A breakout, when it breaks out on face value, that's bullish until less fails. But again, it has been my experience many times over that breakouts that occur with negative divergences and overbought conditions have a very high failure rate. So marginal can be, if we pop the new highs, 2, 3, 5%. Probably not much more than 6 would be my guess. It's been the pattern in this market for a long time, and it's exactly what happened back here in a nearly identical trading range. Then that drop came, and I was making the same predictions back then. So now here's the takeaway, and please hear me on this because I usually cover the broad markets in the beginning. I've been doing this for many, many years, both professionally trading on my own, and then doing the website for a long time now. And I can tell you from the comments and the feedback and the especially the comments on active trades, um, that most people, most of you listen to my voice, want to trade the stock market. You want to go to a party and tell everyone that you're beating the market. When the market's going up, that you've been long. When the market's dropping and everyone's getting killed on their 401k, that you profited on shorts, or Bitcoin or gold. Those are the big ones, really. The stock market, and of course any stocks de jour like Nvidia, whatever, which are a big component of it. Gold, silver, and the gold mining stocks have always been a crowd favorite, on and off, of course, depending on what they're doing. Like right now, obviously we know what they're doing. Bitcoin too. So the majority of the comments I get are on those. But what we're going to do is we're going to look at again, as a trader, I don't trade for props. I don't go on to CNBC. I don't seek them out. I don't even look at emails that might come in for, hey, I get all kinds of things. Hey, let's partner up on this site. Come do our, come on our YouTube channel. That's not my thing. I like to do my own thing, and I trade for a living. So performance is everything. Absolute returns. And I can tell you what I've been telling you. I strongly believe 2026, more so even than this year, will be a stock picker's market. However, so we're going to look at some trade ideas right now. And to do that, again, there's the S&P. I'm not going to go into these right now. I will do a deep dive in the next couple videos on the Mag 8. I definitely, again, want to cover the Mag 8, 9, 10. There's a lot of key developments, both which have recently occurred and some which to watch for. And there hasn't been a lot of talk about them lately, at least not from me, because the market's kind of picked up elsewhere. We've seen breadth increase. We've seen market breadth improve, more broad participation, which can be glass half full or empty. If you want to put it glass half full, I absolutely see that case, that you can see leadership kind of taking over, the market leading fangs taking a breather, and some other sectors stepping up to fill the gaps. Again, we're going to talk on that in another video. So let's talk about making money and where the opportunities are. To start there, let's go here. Okay, we're going to look at right side of the chart. I'm going to share some new trade ideas. A lot of the trade ideas that I get and that I share on the site come from you guys, subscribers of the site, asking questions on a stock, and I'm like, oh, I really like that one, or sharing something that you're looking at that I might have missed and haven't seen. And so I thank you. Please keep those coming. I'm going to go over a few here, but we're going to recap. Again, not to beat a dead horse, but comments have been very quiet lately. And we're going to go here to Trade Ideas on the site. Click the Trade Ideas menu, and we're going to click on Completed Trades. This is the way the category system that I came up with years ago on the site worked. You have these are categories and then subcategories. So if I click on Completed Trade Longs, obviously, as the name implies, it's going to show all the completed trade longs. Here, I'll do it here. It'll load, and you can go by year. It's defaulting to 2025 right now. I had to manually click over. I have to get a developer in here. I've noticed a couple little glitches here. And in fact, that was only one long. We had one long, one short that I think I posted so far this year since the first of the year. If you go to 2025 or any other year, you can sort them by symbol. Right there, if you're looking for something particular, let's say coin, then you can sort them alphabetically. It's going to be easier to find, or by date. And you can also you can go there. You can do that for short trades, long-term trades. That's a separate category. Growth and income trades. I need to remind myself to tag those. I can do multiple categories. Swing trade can be both a regular typical swing trade and a long-term trade. And if you want to know what my definition is, I have it here. If you click on long-term trade category, down here you're going to see what they are. So these are not mutually exclusive. They're often overlapping. If I see a potential for a trade, we're going to get them. I'm going to give you shorter term swing targets and also longer term swing or trend targets. And then the growth and income trades, I'm going to show you a few of those new ones today. that just a subscriber asked me to give my 2 cents on. Let's go back to that. Let's click on completed trades. It's going to show them all what I need to have a developer look at. I don't know why some of these are showing here December 31st, and I didn't make a post on that day, categorize them here. However, coming down here, they're all correct. So if you go to, we are on 2025 right now, and so you can see 2026, scroll down, which I just clicked on. Let's see if did I do that? 2026. Yep, there we go. So we have one long, one short, completed this year. One at the final price target, one that hit the second of 3 price targets. And so I'm going to go back here, 2025. Bear with me. We're going to go here, 2025. And we're going to just take a look. I'll only go down here to, this what's on here on the first page. And we're going to go over some of these trades. So we go to, and again, the takeaway here is a lot of these are not completely obscure, but some relatively obscure companies. Most of you probably haven't heard of Octave, especially. And again, when we started that one, this one I just got out to you today. So if you're listening to my video, you saw the update on this one. And you can always do this too when you're in a post. If you want to see the previous ones, click on the symbol tags down here. That'll also loop them over. So this one, for example, today, even though I was just in the 2025 category, hit the final price target. So we're going to look at, and we'll start here because it's the first one. I'm only going to go over the first half dozen or so trades. And what I'm trying to impress upon you is the eclectic mix of trade ideas, and how, even for the past 3, even 6 months, really all year, if you go back all year, we've absolutely destroyed the stock market. And again, if you're trying to trade the stock market, those calls have been futile. I'll keep pointing out these divergent highs, and we've had longs as well. We've covered all shorts on several instances over the last couple of years. At every single major low, reversed long, but it's as far as the swing trades, the shorts have been hitting the earlier targets, in many cases not the final target. Next high comes, we short again, and those trades have been not blowing the market away. Let's just say we've been a buy and hold market for the last since April. We went long there. We were long the morning of those April lows, posting hard, cover all shorts, go to a hard long position. When the markets peaked earlier this year, was the best buying opportunity in years, but I didn't tuck them away as a long-term trade. However, again, one trade on the stock market isn't, in my opinion, should never be the entirety of somebody's portfolio. Even if you're actively trading, it should be one of many positions. And, depending on the time, I like to include different mixes of asset allocation, stocks, bonds, crypto, and then in the equity arena, different sectors, as well as both long and short trades. And we're going to go over those here. So Octave, as you can see here, it was AMBC when we shorted it. And so there's two things, I'd like you to note, not just the entry price. When you look at a lot of these entries, were as close to perfect as you can get. Shorted that one there, and today we covered it there for 32% profit, right? And again, I give you all the charts so you see there, and that's just one of many. What I'm showing you here is this. Imagine this was in a stock market which, as of today, is flirting with new all-time record highs, and yet we've had probably an equal number of short trades, not just successfully hitting targets, but we're talking well into the double-digit targets. So again, take your time, go through these. If you're passing on individual trades, maybe some people don't like trading individual stocks, long or short, because you do have to navigate earnings and other things like that. I will say there's additional risk in trading individual stocks over an ETF, which is more diversified. So there's AMBC. Next one, I'm going to just click the back button here, go back to trade ideas and all the completed trade ideas. If I can navigate my own menu here, Completed trade ideas. All right, so that one, the one before that was Molina. That one we hit so far the second of two targets for a 22% profit. And on this one, we didn't nail the bottom, but we certainly didn't get in too far after. We bought it there on a break of that level. And as I just updated you, we just hit the second price target. And you can see you usually get reactions off the initial targets. And so, there's a 22% gain. Again, over this period of time, also, please note not just the total gains on these trades, but these are swing trades. These are usually these targets we're hitting, well into the double-digit profits, typically within weeks, sometimes just days. But that's the typical holding period on a swing trade. I always say is about, again, it varies stock to or security to security. Bitcoin and silver and natural gas, they move a lot faster. But most stocks, it's usually about a roughly anywhere, I'd say, from several weeks to several months, right? And again, multiple targets along the way. So we have MOH. So far this year, we hit that for 22% profit on the second of third targets after OSG was closed out today for a 32% gain on the final target. Before that, I'm not skipping any. This is just another update on OSG. Next one was Orange Juice Futures. I understand there were virtually no comments on that. Somebody actually pointed it, I put it on my radar, I believe. I've traded Orange Juice Futures on and off over the years, but this one we just hit T2 for a 42% profit recently. It's still consolidating there. And again, 42% since we entered this one on December 12th. And on December 23rd, a couple weeks later, we made 42%. Again, there was no ETF out there or ETN. So if you don't trade futures, you do have no choice but to pass on some of these. If a futures contract does have an ETF or an ETN that tracks it, I do my best to point it out to you. Natural gas, I don't know how to categorize this one because it is multiple entry points, exit points. I give you updates along the way. I've even shared my thoughts where I've said recently it's just acting atypical. I haven't seen, the scope and magnitude of that drop. It almost reeks of market manipulation. However, it depends. Again, is it successful, unsuccessful? Well, it depends on your entry point, your exit points. As I always do on natural gas, I point out multiple entries and exits, subjective long entries, price targets being hit, opportunities to take profits at those price targets, recycle back in. On the daily chart, we got about halfway to T3, and you also had 60-minute targets that I've given you, which on this one from that entry here or there, we hit that T5, almost hit T6, which I believe was the final target on this time frame. It keeps setting up, but again, it keeps doing this. It's been like wheat has been doing this the last couple of years, just keeps setting up with the nice, looks to be pounding out a bottom. I can tell you it's near its low end of the range. Remember, natural gas, I like futures. I know a lot of you don't trade them, don't know how. UNG, you're going to have additional decay, if you will, because they're rolling the futures. They have expenses, but when you look at natural gas, we're close to a bottom. It's only going to go so low. But again, my point is, do you consider it a profitable trade at any of these targets or a stopped out trade? Depends on really your entry, what you were targeting, where your stop was, or if you're still in it. Okay, moving on. We only have a few more, and then I'm going to get to some new trade ideas for you here. UPS on the 19th, just before week before Christmas, we hit our final target. And again, note the entry points and exit points. That's something that I think I do different from most. I've always said it's one thing to determine where to buy a stock. Everyone's going to give you buy points, breakouts. That to me is, well, it's more of an art than a science. But I've always said the hardest decision in many cases is when to exit a stock. Quite often, not always, but quite often, we'll nail the exit with impunity, get out, and the thing turns around. And again, you can study the trades just in the last few months and see a lot of that. Um, and then there's other times where I feel that I've sheared most of the meat off the bone and that the risk reward to staying long isn't warranted. So I'll make that the final target. I'll get out and that trade may continue. And I'll often, as I always often do, share my thoughts that if, hey, it may have more upside, set a stop and let it run. But just to look at that one, so we bought it here, long-term support. And then the final target, that was the long-term support. We entered right here. And then we just recently closed it for a 22% profit at the final target. And it's still there today. I checked it earlier. It's still at T3. And so it hasn't gone down, but it hasn't gone up anymore. And again, that was it. Sheared most of the meat off that bone, has a divergent high. So we, I let that stand as the final target. Sometimes I'll give you additional price targets. Okay, so that was UPS. I just covered. I already covered UNG. OC, Owens, Corning. Again, we've probably had as many, if not more, longs, in at least, especially hitting price targets in the last quarter, last half of the year. Again, I'm just going back a few months. This one, we bought it right here at the long-term support, bottom of the long-term support zone. And there was our entry. I gave you a buy zone. Sometimes I'll give you a hard entry. And some, an exact price level might be a breakout above a bullish chart pattern or a resistance level. And when I'm buying pullbacks as support, and I hope you recognize by now, if you've been with me for a while, you know my style. I am not always, I will use continuation patterns quite often by pullbacks as support in an uptrend, but I tend to be a very contrarian trader. I'm usually shorting when everybody, including most listening to my voice, want to go long and buy. And I'm usually buying things that look like I'm trying to catch a falling knife. It's my style, and it doesn't always work. And you can certainly get cut, and you can lose a lot of fingers if you don't use stops. So quite often I'd make my point when I can to give you a suggested stop, especially if they're pretty clear price targets. And obviously some people might use a higher or lower stop. So that one, again, you almost hit the bottom there, but it was a perfect pullback to the bottom of my buy zone right there. So someone might have added or hold off, or maybe they didn't get the post to the following couple days later and said, oh, well, now we're at that bottom. It's even better. If you liked it right here, that's the bottom buy zone. And then we hit, what did we hit it at for a 10% profit? And I don't know where we're at now. I'll check it. I think we're getting close to T2. All right, that's OC. Continuing on. I think I already covered this one. Did I already cover MOH? Yes, I did. And that's it. ZB is still, well, we have an active long on ZB. I'm not super crazy about it, but I threw it out. We've been Treasury bonds. We're probably batting easily over 800 in the last year. Going long, short treasuries. They trade, to me, my trading style, treasuries trade very well to that. And again, I think we're batting north of 800, meaning 80% success rate, if not better, on treasuries. And just swing it up, swing it down. And I don't get a lot of comments, but I mentioned that I use beta adjusted position size. I had to talk about that last week or a week ago when someone said they were getting quote unquote killed in silver. But yet silver was just making its daily thing. It's been going up 5 to 10% a day lately. It's gone parabolic. And so with silver, with natural gas, with Bitcoin, you beta adjust down. You take a fraction of what you would put into, let's say, SPY, the S&P 500 index fund, which is broad-based and diversified and goes up or down, at most usually about 3% in a day. An average day is under 1% move, right? So now you do the opposite, as I often talk about with CB, and I expand on that in the, if you go to resources, FAQ, trading related questions, what is beta adjusted position size? Read up on that. So on treasuries, as I often tell you, I'll take a 2 to 3 times size position because the gain potential in percentage terms is smaller, and so is my loss potential. So it all equals out. I don't care, if I say, oh, I made, 80% on a natural gas trade. Well, I might have only put a third a position into that what I might normally put. So you adjust it down. It's still a nice trade, right? And likewise, when it goes against me, my smaller position size, I might accept a 15% loss on that trade, but in dollar terms, I didn't lose any more I would have on a SPY trade with a 5% stop loss. All right, so that's that. Treasuries, and again, that's just the last completed trade. I think we're done here. Yep. Okay, I'm not going to bore you with details. You can go through these, and again, you'll see just a vast outperformance. Again, the stock market's gone nowhere now for months, but these individual trades, and you just have to, if you want to make money here, you're going to have to get away from only trading one security. Look, sometimes we hit a home run on in those high flyers, Bitcoin, gold, silver, GDX, natural gas, things that move fast like that. But you're going to be either very happy or very unhappy if it goes against you. So I like spreading my bets. It's the same exact premise you use for investing, which is asset allocation, diversification. You have a pie. Your portfolio is a pie, and you have pieces of that pie. As a long-term investors, it's basically stocks, bonds, cash, and alternative assets, crypto, commodities, and other things like that. That's called asset allocation. Typically, the more aggressive you are in your 401k, the more stocks you have, less bonds, and commodities and alternative assets. But we do the same thing here with an active trading or a swing trading account. In my opinion, it's the way to go. Because you never know which ones of these are going to pop and which ones won't. Okay, now on to some new trade ideas for you. All right. So I'm going to click the home button, go back here. I often say, come into the site if it's a slow day or just to see what's being posted. I'm going to probably make these official trade ideas. I went back as far as this post from yesterday, and you can see I replied. Somebody asked my thoughts on MOH, which I shared here. Somebody asked about XFF. I don't know what that is. Just clarified. Give me the name of the company, unless it was a typo. Maybe they meant XLF. I'm not sure. And then this one. Okay. J McCallum. This one is, do you have anything on GIS, CPB, KMB, or MDLC? That's General Mills, Campbell's, Kimberly-Clark, and Mondelez, I think is how you pronounce it. The confectionery, I believe they do. The GIS, these are great charts, by the way. I really like these for 2026, but my comments and notes are in here. So I'm going to share this with you now as both trade ideas. And I'll probably refine these charts and maybe share the daily charts as well. When I analyzed them, I did look at multiple time frames, but to me, the most relevant time frames right now are the weekly. So all these charts are weekly charts, and here's my thoughts. GIS is in a death spiral. Here, I did it. Yeah, I did it in that order. GIS, again, General Mills is in a death spiral with zero evidence of a reversal or any buy signals. While the odds for a short covering rally are rapidly building, could be sparked any day now, my preference for a long entry, other than a candlestick reversal pattern, would be a little more downside to the $41 support and or a solid break or weekly close above the downtrend line. I'm going to show you that. You'll notice I'm often putting things in parentheses because there's a lot of little nuances to trading. So, very clear. Like right now, what I can see on the chart, I can see support, I can see a downtrend line, either of which will offer objective longs, but I can't see what hasn't happened yet, such as candlestick, a potential candlestick reversal pattern. What would that look like? For example, one simple one is a bullish engulfing candle, especially on the weekly time frame. But there's dozens of others, and there's a lot of resources out there you can Google to see the different types of candlestick reversal patterns. Some are single day, some are 2-3 day, multiple days. And so there's my chart. And again, I'll try to get these out to you, but I just want to cover it now since I'm doing this video for anybody interested. There's some nice support around 41. If it takes that out, this is the next support, even more significant longer support. I would probably morph these arrows like I did on a chart I'm going to get to in a second. So this would be my preference, right? Why? Because I really like to buy oversold, which we're already at support with positive divergence. You can see these lines, these divergence lines I have extended out. So if we do go down a little bit more, get closer to that 41 buy point. And by the way, I wouldn't wait for 41.00 to buy. I'd buy a little bit above there in case the buyers step in early. However, I'm also going to be looking at the 60-minute charts, the daily charts for anything there, so I don't miss a reversal in case it reverses at $41.80 or $42. However, it may never get there. Maybe we pop this trend line. My guess is if we pop this trend line first, it'll probably fail, come down, and hit that level. From my experience, when you get down, it's a decent. It's not a super duper support. It's not a 10 on a 1 to 10 scale, but it's up there. It's probably a 6, 7. It's a pretty good support level, and I would like to see it there. These are also in a downtrend, as I said, with zero evidence of reversal, and nobody wants them because, as I said in reply to another one of these, again, I replied on all those symbols. Right now, everybody wants silver. Everybody and their brother and mother's tripping over themselves to buy silver and GDX, and Bitcoin's out of favor at the moment. But it's, silver and gold, it's taken that baton. It's so funny how, when Bitcoin's going up and gold's going down, they're saying gold's done, Bitcoin's the new gold. And now they're saying, now gold is gold again, where people are worried about the debasing of the fiat currencies and inflation and all the other reasons. It's just, the media is always going to fit the narrative, guys. I promise you that. They're gonna manufacture a narrative if they can't come up with one that sounds logical. But either way, it doesn't matter. We know what's going on there, and I'll get to that in another video. So there it is, guys. What I think probably going to happen, it meshes more with my views for 2026. My degree of confidence is very high. We're going to have a pretty hard drop, probably the start of the bear market in 2026. We made a marginal new high, which is really continuation of my long-term targets from last year. But either way, probably come up here, then come on down to this. Again, this is 3-5 steps ahead. We don't even have the buy signal yet. But looking at everything else, if we start to rally here, what will happen is, here's my prediction. The risk bubble is going to pop first. Tech, AI, you'll see more downside in the video. Once it's clear to most or all that QQQ is falling harder than SPY, the market's going down, silver bubble has popped, then you'll see rotation. I promise you at some point soon you're going to see rotation from institutional investors. They're the smart money. I've been doing this for a long time. This is what they do. They're going to rotate out of growth. Right now, growth is where you want to be. Tech, semis, and gold and silver are catching a bid. And whatever other sectors are hot right now, financials are hot. And that's growth right now. That's a play on the economy. When that turns, that money is going to go out of pension funds, hedge funds. It's going to move into steady Eddie, boring grandma stocks. This is grandma. This is General Mills. Steady Eddie, dividend paying, cereal and all that stuff, packaged food. So that's it. So my point is, so you'll get that bid to a flight to safety rotation into defensive issues, which is certainly, this is a king of defensive sectors. And you probably get that rally. What's it going to be? Let me go to the live chart, try to tell you here. To the other few, and we'll wrap this video up. I was on a weekly time frame. Let's assume we drop to 41, close to it. That'd be about a 17% rally. Be nice short covering rally and sector rotation. And I had the arrow going up to this target. These are all potential targets. Again, I'll have to play it one step at a time. This right now would be my maximum bounce target. But if things play out the way I think it will, we'll go down here, get to there, buy. You'll start to see the high-flying stuff rolling over, the risk-on, shift to risk-off mode, money rotating into defensive stocks, come up here with the defensive stocks rallying, maybe hit that level. But at that point, we start breaking the deeper support levels that I've talked about. We undercut the 200 days in the indexes, flip some of my longer-term and intermediate-term indicators because they're comfortably above most of my long and intermediate term indicators right now in the stock market are comfortably in buy territory. So we need to flip those, and once it becomes clear that the stock market's breaking support, then you get the outflows. Money starts coming out of the market, out of 401ks, pension funds, and hedge funds, but mainly the big pension plans. They have to then cover their ass. They can only lose so much, so they start taking things out of the stock market, shifting into safe haven assets. And so, again, this is 5 steps ahead. May not play out this way, may go this way. We go down there, and when the stock market starts correcting. And then I would look to rebuy or buy back into General Mills there. So again, let's just say right now, focus on objective entry points, and we'll play this one by ear. We'll see how it goes, right? All right. The next one was CPB. So Campbell's is in it's a nearly identical chart and fundamentals, what I just said. Nobody wants boring, steady Eddie, blue chip, conservative, defensive consumer staple stocks in this AI, silver, high-flying tech stock bubble. But they will once it bursts. Campbell's is also in a death spiral with zero evidence of reversal, blah, blah, blah. Same story, guys. But again, you're buying blue chips. Campbell's has been around longer than a lot of you listening to my voice, as has General Mills, and will be probably when, unfortunately, you're gone and I'm gone, right? So these are blue chips, steady eddies. They're just out of favor right now, but they will be, and as I told you, when that shifts back to this being in favor. And this is really nice support. It's long-term support. Again, not a 10, but pretty good. And I have that at about 25.20. Also, same thing, and you have a downtrend line, and you have your 200-day moving averages, 40-week moving averages right above them. And so that's a nice, steep, bullish falling wedge. You have potential, and again, I say the word potential positive divergence forming because we need to turn that PPO up, cross it over. So, look, I mean, it's not the end of the world to start. You're getting close enough. We're at 26.63. You could start scaling in here right now if you don't want to miss the turn. I don't have it up on me. I'll look at the dividend in a second. But these are dividend-paying blue chip stocks, unlikely to go to zero, unlikely to declare bankruptcy. You can look at it, the fundamentals. I haven't, but there's my targets, 29.77. Let me go to the live chart and tell you, try to quantify it. CPB. And again, this goes back to what I was saying earlier. I know not all, but many of you listen to my voice, want to be in silver right now, want to be in GDX, to catch that bottom on Bitcoin that's been beat down, right? Correct me if I'm wrong. Want to maybe jump on the next big AI stock that's out there, the next big NVIDIA. But hey, if that's your plan, I love to hit home runs. I love to catch those. I'll do my best when I can. But if you want to, make money, if you're here to make money, if you're going to take your time studying charts and trying to do this, it's all about blocking and tackling, hitting a lot of singles and doubles, right? It's great to be that home run hitter, the slugger that steps up to the plate, and they're either putting it out of the park or they're striking out, right? Everyone loves to see that, the Barry Bonds of the world, those kind of guys. But that doesn't win games. It can help, but you got to have the guys hitting the singles and doubles, putting people on base, batting runners in and that kind of stuff. And that's what trading is to me. So this is CPB right here. There's a nice support about 25.20. We're in no man's land right now. We took out this 29.77 support. We're not far from there. So you could make a case to start scaling in now, or you can wait for a drop a little closer to that level if you're trying to thread the needle, or. When I say that means part here and take it to a full position when the trend line breaks. That's a nice, clean, bullish falling wedge pattern. And the short covering rally, when it comes, will be, I don't want to call it explosive because this is Campbell's. It's not Bitcoin, but it could be pretty nice. And so let's quantify it. If it happens to bottom, again, nothing in the chart saying it's bottomed yet. That's about a 12% gain to my first target, 29.77. And if you can buy it closer to the 25-ish level right there, and then you're talking about an 18% gain. I might put an additional target right here at top of that reaction high. Max target as of this point in time is about 37.80. and that would be about a 50% profit for you, 50% gain back to that level. Longer term, if the market does shit the bed this year, pardon my French, and really take it on the chin, again, you probably see the same kind of thing. Maybe rally up here, maybe about right there, come on down, and we might get a hell of a buy down here, towards the tail end of the bear market, or even during it. And again, these are the guys that are only going to go down so far. If a real bear market comes, and we haven't seen a real bear market since 2008, early 2009, we've only, in my opinion, seen corrections, even though they have met the definition of a bear market, the 20% or more drop. These guys are going to be the ones you want to own if you're going to own any equities. NVIDIA and things like that will get crushed. Here, I just drew on some divergence lines here. So we had a divergent low there in 02 at the end of that bear market. These are the times I like to buy. The last divergent low I have on the weekly was right here in 2019. And those are the times. Again, it's my trading style. I like to get out or sell or short around divergent highs and start accumulating or go long around these divergent lows. All right, a couple more and we will wrap this video up. KMB, again, they're all in the same category. I thank you for pointing these out because it put them on my radar. KMB, that's Kimberly-Clark, this one offers now an objective but aggressive long entry. What do I mean by aggressive? Why is it objective yet aggressive? Well, because it's a catch a falling knife trade. Because there is absolutely no evidence of a reversal. There's no breakout above any type of bullish chart pattern or downtrend line or resistance. It's in free fall. So hopefully I try to be very selective but direct with my words on what's a more conservative or conventional entry. But it's these are the ones that pay off nice when you get them right. And again, if they don't pan out, that's what stops are for. So this one is an objective long entry at the 97-ish support level. You can see KMB, Kimberly-Clark. Support, you have this reaction low from 2018. You had a reaction low there, some consolidation around there. Big old thin zone. I don't know if you can see my volume at price histogram. There's just not a lot of support below here. That's the get out of Dodge doomsday bear market scenario. And look, I wouldn't be surprised in the next few years if we see that level. However, until then, it's almost guaranteed at some point you're going to have the stock market's going to start to go down. Tech will start to go down, the aggressive stuff first, and you'll get that sector rotation. It almost always happens. And so there's your targets, two targets, 110.30, 116.50. Let's try to quantify it for you, KMB. And when I quantify it, because then you can figure out what your stops need to be. So if you say, yeah, Randy, I like this one, I'm going to buy this one here. And I'm going to try to swing it up to your first target only, 13% profit. Plus, you're going to get paid a nice dividend. I think it's, if that's correct, about a 5% dividend yield. Remember, these are all, so if it takes you 6 months to get there, you're getting an extra 2.5% in dividends. So add that boost to your gain. That'd be about a 15% net profit. And in that case, you're going for a 15% profit. You can give yourself a 5% stop loss, and that's a nice 3-to-1 risk-reward ratio. That's just an example. My second target's up here, 116, a little shy of the 116.50 level. Always sell a little below resistance. That's a 20% profit plus dividends on that one. So there's an actionable trade idea. Again, no buy signals here on the weekly chart. On the daily, no buy signals. You have positive divergence, but as I often say, oversold conditions, positive divergence, those are conditions, not buy signals. A buy signal would be, candlestick, reversal pattern, anything like that. We're at support, so that's just it. We don't even need, in my opinion, you don't need a buy signal. Buy at support with a stop below. It's the easiest trade. Don't overthink it. And then last but not least, MDLZ. So this one offers an objective long entry here at the bottom of the 55 to 53-ish long-term support zone with stops somewhat below, ideally on a weekly closing basis. If I'm trading off a weekly chart, I like to use stops based on a weekly close. What I find, again, I'm teaching things I've learned the hard way, the expensive way over the years. Trade off that, use a weekly close, and then you get a little, what will happen is quite often you get a little flush out, a washout move, a little selling climax, big move down, even overshoot support briefly, only to close the day or the week back above that support level, whereas a hard stop would have taken you out. By waiting to see a weekly close below there, yes, you're opening up yourself to a little bit larger loss potential if it keeps going. However, again, more often than not, that will let me avoid the what I call a stop raid on it. So all I can tell you, it's a pretty decent support right here. Unconfirmed. What I mean by that, well, that PPO needs to cross up, make a bullish crossover, and keep this divergence intact. The divergence right there. Higher lows in the indicators, RSI, PPO, and lower lows in price. That is positive divergence, and it will be confirmed when you have a bullish crossover on the PPO that effectively gives us a higher trough or low there in the PPO. Targets, as you can see, first target and my preferred target, I would get out because there'll probably be a reaction about 13%. You're going to have the 200-day moving averages, which on this weekly chart are the 40 period on the weekly. They're going to come in together. So, and or you can set it and ride out the pullback if you think, we're going to be in some super duper bull market that's going to continue forever. Maybe these guys go on to new highs. But all right, that is it. 46-minute video. Again, there might be other trade ideas. I see some new comments that I haven't opened yet and replied to. I'll try to get to those as soon as possible. If you do ask a question or make a comment and it gets too far back and I don't get to it, if you see me start answering comments back here, just repost it in one of the newer posts and I'll go to there. I usually look back a day or two, and then someone will sometimes post something back here and I don't see those. So all right, just do that and I'll get back to you as soon as possible. All right, until then, I'm going to work up some thoughts again on different videos. I'm going to cover the magnificent, whatever you want to call them, 8, 9, 10 stocks. I want to cover economic indicators if you are interested. I don't think there's much else to add on anything else I've covered lately. It's still a bunch of individual stock trade ideas out there. By the way, like these right now, before I wrap up, like those right now they're trade ideas. They weren't even posted. They were covered in a video. That makes them what I call unofficial trade ideas, because they're not going to show in this trade idea category till I post them and categorize them that way with individual charts. All the ones here in the trade idea categories have individual screenshot charts with targets, explicit price targets spelled out. But they're still trade ideas. I like them. You can, as I clearly said, I really like these. They're just, the timing's not precise at this point in time. They're more of scale in trades. Take starter positions now, and some are actually hard entries that support. A couple more, but there's also a lot of unofficial trade ideas that I'll give in comment sections. For example, somebody recently asked me about Adobe, DBE, and I liked it, and I gave a price chart with price targets in the comment section. So these are homepage posts, as you can see here. These are on the homepage post, so I know that was a comment. So I go to post comments, and here we go. This would have been the last one, January 5th. And it'll take me to that comment. Oops. Did I miss that? Okay. Oh, there it is. Okay, there's one I missed. That was just from yesterday. Okay, that might have been one of those comments I haven't got to yet. So let me go back there. My apologies. Yeah, I do still like it. In fact, that's why I'm covering it. I'm going to get to the chart in a second here because I think it's offering we already hit the first target I gave to whoever it was right here. December 11th. Here we go. That was the one I replied to. And there it was. So any thoughts on Adobe? Yes, Adobe breaking out of this bullish falling wedge downtrend line, providing an objective long entry following the most recent low. So there was a breakout. I gave you a total of 4 targets. And we already hit a DBE, that first target, allowing you to take profits there. Gave the pullback. T1 was hit. It had already broken out. It wasn't a lot of meat to that first target, about 4 or 5%. But since it hit there, there's the typical reaction off my tag of my initial target. And look at this. Look where we pulled back to. So yes, in fact, I was going to point this one out yesterday. I'm just trying to put my thoughts together, what to cover in the videos, what to get to first. I like it here for two reasons. Not only is it that 328.47, look at that. That was a previous reaction low. Boom, boom, boom. One of my favorite trades. This is what I call the false breakdown. Just like I think the stock markets are going to do a failed breakout to new highs. Pretty much have, just like they did last year. And these are super bullish, just like in reverse, a breakout, when you have a trading range like we do in this S&P 500, if it breaks out to new highs and fails, why is that so bullish? Well, because that's a new low. What I call JCL, or Johnny Come Lately shorts, pile in. It also flushes out the last of the weak-handed longs. I can tell you, after Adobe, again, I've been doing this a long time, after a drop down here of 48%, the poor sucker that bought it here, and all the poor suckers that bought here. By the way, we shorted that high. Look, I had 3 targets for you. We hit that third and final target. And there's a case where I didn't try to milk. I also put in a divergent low, and so we rallied, then a divergent high. But so those poor suckers that bought anywhere along that 50% drop, they're feeling pain, be they personal, an individual investor, or an institution. Institutions probably didn't, they might have written it out that long. But what I can tell you is a blind man could see this support. And so this is where, after a 50% drop, with the stock market making new highs, a vast majority, a lot of folks have their stop losses set. So when you get it, they get hit, and that purges out what I call the weak-handed longs. Those that just can't take the pain anymore, they flush out, and now you have a stronger base holding the stock. Now, if the stock market craps out, Adobe won't pan out. But if the stock market holds up and can rally, this was one of the better-looking stocks, because that was the support level. And once you regained it, look what happened. This is not mere coincidence. It was explosive, because that's very bullish. When you have a breakdown and then it fails, that's the shorts, the Johnny Come Lately shorts. It figured, this stock's just going to keep going down. It just broke major support. Who in their right mind? Not me. You know me. I like these divergent lows with positive divergence oversold. But there are people that just see that's resistance and they mechanically short a break of it, not paying attention to how oversold, not paying attention to the divergences that tell you the momentum's waning and a trend reversal is likely. And then when you got it, see what happened? They got roasted. This is where the stop losses on the short sellers were, those that shorted this. They got stopped out. And when you get stopped out on a short trade, you're buying the stock. That's what a closing position is. When you short something, you're selling a stock you don't own. You're borrowing it from your broker, who's taking it from one of the clients. They have the stock long. You're selling it, and then you have to buy it back, and that's why you get that. And then the people like me, I didn't short it, but I see it. I didn't take it then. But the sharks come piling in, seeing that the breakdown failed, and that's very bullish. Then you took out the downtrend line, beautiful, nice, clean downtrend line. That was a breakout. Hit the first target and the 200 days right above it. A very logical place. That's why my first target was here. Price resistance plus the 200 days. Pulled back, and look where you pulled back to, support. So yes, I don't like this stock. I love it right now. I wish the markets weren't looking like they're on fumes, but it's easy. You take it. We already had a failed breakout. You can have your stop relative to your price target. If you buy it here, I'm going to take from where we're at right now, not where that's where I intended to throw it out to you yesterday. By the way, it was also a back test of the downtrend line as well. And so from today, if you buy it right here and you're targeting that fourth and final target, that's a 26% profit. You could easily give yourself a 7% stop that's going to be below those lows, or you can keep it a little tighter, up to you. And again, you might only be targeting, but remember, if it goes up to my second target now, and we're just saying if we hit T2, we're going to take out the 200-day moving averages, which define, the trend here. This is when we started wobbling on the 200s, and this is where right here where they were clearly lost, that put us in a downtrend. So if Adobe recovers the 200s and the market, especially this subsector, software, is doing well, yeah, it's probably going to run up at least to that fourth target. All right, I'm going to wrap it here and continue to hunt for new trade ideas. And hopefully I impressed, upon you the key to you know, especially in a sideways market. Again, nobody's made money in the S&P 500 or the Nasdaq 100 for months now, unless they've been just actively swing trading the rips and dips in those trading ranges. And remember, that tech-heavy Nasdaq 100 is wobbling even worse. This is, the S&P is pushing at the top of its trading range where we're only in the midpoint, and that to me says something right now about the market. Again, glass half full guy and gal say, that's healthy. We're seeing other sectors picking up the baton, and the tech's just taking a breather, and it will resume. Whereas I've seen this movie many times, when the leaders die and stall out, that's the first sign of a top. Then you get that final gasp, and then they call it. There's even a term for it. I'll talk about that later. It's called terminal lucidity. If you've ever heard of a dying patient, somebody on hospice, and they have that final moment where they just, man, wow, they just all of a sudden they're doing real well, and we had a great conversation. Things like they're getting better. Again, it's a scientific term. You can look it up. And a market often has that as well. So we'll see. I can really see either. Well, which way I think it's going to go, but it's not going to. I'm not going to be shocked, and my jaw won't hit the floor if we break out and just keep going there. I certainly won't be shorting the equity market on a 10, 20% rally above there. What I'll be doing is trading different stocks, sectors, and asset classes, long and short. All right, I'm going to wrap it here. This has been Randy Finney with Right Side of the Chart. Have a great day.